Internal Revenue Service IRS tax news. IRS has options for gig economy workers and those with unemployment benefits. IR 2021-97, April 29, 2021, Washington. The Internal Revenue Service reminds workers in the gig economy and those who claimed unemployment compensation in 2020 of their options and where to find information to meet their tax obligations. Gig economy. The gig economy refers to income earned providing on-demand work, performing services, or selling goods, including driving a car for booked rides or deliveries, renting out property, selling goods online, or freelance work. Often customers and service providers or sellers are brought together through a digital platform on an app or website. Visit the Gig Economy Tax Center on IRS.gov. There's a link to that here to learn more about withholding and estimated tax requirements for these types of earned income and paid services. Taxpayers should collect and keep records and receipts during the year. Record keeping can help track income, deduct expenses, and complete tax returns. Note that the IRS is giving more attention and concern related to the gig economy because, of course, it is expanding and they have concerns about the reporting of the income basically to them. So in other words, if you think about a W-2 type of employee situation, if you were working for a company, the IRS is obviously getting the information from the employer. And the way the IRS has leverage to do that is they can go to the employer and basically say, hey, do you want to get a deduction for the employees that you have? And of course you do. That's a huge tax benefit. So the IRS says that's great. Then what we want you to do is to give us a W-2 for their wages and withhold money from them and actually pay us their money directly to us. So the IRS has good leverage if you're actually categorized as an employee over the employer to not only get the information about your earnings so they can check up on the employee to see if they filed and paid the appropriate taxes, but also actually get paid directly from the employer by them withholding the money from the employee. Now, if someone is going to be a contractor, say you're a sole proprietor, then if you're working for a large company, you're a sole proprietor and your clientele are businesses, then the IRS still has a lot of leverages over the businesses. Even though you're not an employee, the IRS can still say the same thing. They could be like, well, do you want do you big company want to have a deduction for what you pay to the contractors? And of course they do. So the IRS says, that's great. What we need from you is to give us the 1099s telling us how much that you paid the contractor so that we can check up on them. So you don't have the same withholding situation there, but you still have that same situation where the people that are paying, which is going to be the companies, paying the 1099 to the sole proprietor, gives that information not only to the sole proprietor, but to the government so that they can check up to see that the sole proprietor is then reporting the income. With the gig work, typically you have a 1099 type of situation where you're often going to be like a sole proprietor type of situation, but the economy has pressured from time to time to try to get the gig work to be more of an employee type of situation, which would probably not be good for the economy of gig work. But again, that would be easy for the IRS to not only track how much the gig workers are making, but also be able to actually get the withholdings. So the question then is, if you're in the gig economy, are you an employee or are you a contractor? Oftentimes you have the contractor. And then if you're a contractor, the issue with contractors that don't work for other larger businesses, like if you were a hair salon or if you were doing nails or something, massage, something like that, and you work for the end customer, then the IRS doesn't have the same leverage as if you were a sole proprietor working for another business. The IRS cannot go to individual people getting their hair cut and whatnot and then say, we want you to issue a 1099 to your hairstylist, right? That doesn't happen. So the IRS has a little bit more of a problem, tracking whether or not those individuals are filling out their tax return properly. Same kind of issue with the gig economy. So the question is, the IRS might not have as much information on their side to double check whether or not the people are reporting the income. Also note that many people do gig economy kind of on the side or are changing from the gig economy from being a W-2 employee. And after you have been a W-2 employee for a while and you haven't really had to worry about, paying your taxes because the employer has been forced to take it out of your paycheck for you and give it to the IRS, people can be kind of shocked when they have to do their own tax filing. It's often the case where people get behind on their estimated tax payments because they have to make them during the year as opposed to at the end of the year. And so it can be kind of a shock as people move from, say a W-2 type of situation to where they have to fill out a Schedule C type of form. So if you are in that situation, if you're moving from a W-2 situation to you're doing some gig work, either full-time or part-time, just remember that typically what will happen if you're not an employee of the gig economy, then even if you don't get the 1099, you're still going to need to, for taxes, file the Schedule C. So you want to file the Schedule C, and then when you file the Schedule C, you got to make sure that you're picking up any of the expenses that would be business expenses related to that so you can lower the income as much as possible. And note that you also have to then pay during the year when that happens. So you got to take into consideration your estimated tax payments during the year, even though you don't know how much you're going to make until the end of the year. And there's a progressive tax system, so it's kind of hard to do that. And you have the Social Security and Medicare in the form of self-employment tax for that to take into consideration as well. So oftentimes, the first year can be kind of a shock if you do a lot more work as a sole proprietor, and then you could kind of get your estimates together so that you're making sure that you pay basically on time. Unfortunately, by the time you're in that situation, you might be behind in your taxes payments already because of that. But just be aware of that. If you're moving from a W-2 to gig work or some other kind of sole proprietorship, make sure that you're thinking about the estimated tax payments and make sure that you're picking up the deductions that could be related to it as you go to your Schedule C and fill out the Schedule C. All right, so unemployment benefits. A record number of Americans applied for unemployment compensation in 2020 due to the pandemic. Anyone who received unemployment benefits will need to report it on their tax returns. However, the American Rescue Plan enacted on March 11, 2021 excludes from income up to $10,200, $20,400 if married filing jointly of unemployment compensation received in 2020 for taxpayers with modified adjusted gross income under qualifying thresholds. So, in other words, normally when you have unemployment compensation, you're going to get a 1099 from the state, generally, whoever paid you the unemployment, and usually you have to include that in income, and it usually would be a taxable item. But they're saying now that up to $10,200 or $20,400 if married filing jointly of unemployment compensation received in 2020 for taxpayers with modified adjusted gross income under a qualified threshold are excluded from income, which is a good thing because if it's not included in income, typically then you don't have to pay taxes on it, right? Income is bad for taxes. So if you have something that normally would have been income, but the tax code now says you don't have to report it in income, that typically will be good because you're taxed on income for income tax purposes. So any amount over the $10,200 is still taxable for each person. To determine if payments received for being unemployment are taxable, see the Interactive Tax Assistance on IRS.gov. Now, there's a link to that here. This is another area where filing electronically is really helpful. If you use the tax software, hopefully they have an interview process they can kind of guide you through whether or not something is going to be included in income or not. So usually that would be a benefit. For those who have already filed their 2020 tax return and paid taxes on their full amount of the unemployment compensation before the law was passed, they should not file an amended return. The IRS will automatically refund money to people who already filed their tax return reporting unemployment compensation. So you might say, I already filed my tax return. I included the unemployment compensation. What do? Do I have to change my tax return? Do I have to amend it? The IRS is saying no. One reason possibly might be because they came up with this law late, so many people would have filed their tax return if they filed on time and early, and they wouldn't have known about it, and therefore they would have claimed it as income, and therefore they could have paid taxes on it. So the IRS is saying don't have to amend it. They're going to fix it on their side. They're going to be able to look through the tax return and say this person qualified for this $10,000 whatever unemployment not included exemption, and they should make the adjustment and then give you that information for the adjustment. Just make sure you have it on your records once you have that adjustment, just in case there's an impact on next year's tax return as you roll the information over. So the IRS will recompute any credits and deductions claimed on the original return. However, if the reduction of income now qualifies a taxpayer for a new credit not claimed on the original return, like the Earned Income Tax Credit, the EITC, those taxpayers will need to file an amended tax return Form 1040X to claim the new credit. So, in other words, if you take out the income and you say that part of the unemployment tax is now not income because the new law says you don't have to include it, because some other credits are often phased out with regards to the income limitation, the adjusted gross income. It could mean that you were not qualified for it before, but now you would be qualified for some other credit like the Earned Income Tax Credit. So if you had not claimed at all the Earned Income Tax Credit, and then you made this adjustment and you were now eligible for it, then you still might have to file the amended tax return to pick that up. If, on the other hand, you had claimed the Earned Income Tax Credit, for example, you'd already been claimed, and then when you make this adjustment, it has an impact on the Earned Income Tax Credit, then I believe the IRS will be able to pick up the changes to the Earned Income Tax Credit as well. But if the credit wasn't there at all, and should have been due to the income limitation, that's when you might need to file the new tax return. So I would suggest doing the same change if you have the tax software on your end and seeing what the change would be, and then let the IRS do it. And when they give you the difference, when they pay you, you can kind of double check and see if they did it properly or not. See if you can come up to the same numbers. If you don't come up to the same numbers, it's probably because there's some kind of credit possibly that wasn't there before that is due there now due to the reduction in income and the phase-out limitations. So taxpayers can see if they qualify for the EITC on IRS.gov. Unemployment benefit recipients should have received a Form 1099-G, certain government payments. There's a link to that here from the agency paying the benefits. The form will show the amount of unemployment compensation they received in 2020 in Box 1 and any federal income tax withheld in Box 4. Some states do not mail Form 1099-Gs. Taxpayers may need to get the electronic version from the state's website. Taxpayers who receive an incorrect Form 1099-G for unemployment benefit they did not receive should contact the issuing state agency to request a revised Form 1099-G showing they did not receive these benefits. This has become an issue because apparently there's been a lot of fraud with relation to unemployment compensation. And so it could well be that if you didn't claim unemployment, but possibly you could have for whatever reason, and someone else committed fraud in some way and I stole your identity and they claimed the refund and they got the money, then the 1099, which would report the income, would still go to you even though you didn't get the money. Now, this is a really kind of a weird situation now because really if the 1099 goes to you and even if you didn't get the money, but it was below the 10,000 somewhat threshold, then you wouldn't have to include it in taxes anyways. So you would think it might not even have an impact on your taxes. But generally, if someone gives a 1099 to you, it usually means that you have to include it in income and therefore pay taxes on it. And if the 1099 is wrong, then you don't want to pay taxes on it, right? So what you would typically need to do in that situation is you have to go back to the issuer of the 1099 because the IRS has the 1099 too. So if you were to just ignore the 1099 and it did have a tax impact, then the IRS would have a problem with it because they have the 1099 and they would say you didn't report the 1099, which we know you got money from because whoever gave you the money, in this case, the government, told us that they gave you the money and you didn't show it here on your tax return. And it just takes a computer system for them to pick that up. And then your argument would be, well, yeah, but the 1099 is wrong because someone committed fraud. And if you try to go to the IRS and argue that, it'll take longer. It'll be a tougher situation. What you want to do is go to the issuer of the 1099 and say, I need you to send another 1099 to the IRS so that they have the proper amount so that they don't think I'm lying to them when I report my tax return and I don't include this 1099 amount because I didn't get that income. So that's the general rule. It applies to any kind of 1099 that would be wrong. It would be best to go to the issuer. If you cannot get it resolved with the issuer, then you still want to report the proper amount of taxes, and you'll have to go through the longer process possibly with the IRS as they pick it up. But generally the easier way to go would be try to get the issuer of the 1099 to fix it there first. So taxpayers who are unable to obtain a timely corrected form from their state should still file an accurate tax return reporting only the income they received. A corrected Form 1099-G showing zero unemployment benefits in cases of identity theft will help taxpayers avoid an unexpected federal tax bill for unreported income. So additionally, if taxpayers are concerned that their personal information has been stolen and they want to protect their identity when filing their federal tax return, they can request an identity protection PIN, an IPPIN, from the IRS. So, in other words, if someone stole your identity and they took your unemployment compensation, it's likely they have your social security number. And then you might think, well, I don't want them to then file a tax return because it's likely that they might try to do that and then try to get the earned income tax credit or something like that to file by filing your tax return, stealing your information, your social security number. If they did that and then you tried to file, you'd have a problem because the IRS would say someone else already filed, and then you have to go through a whole thing on that. So the way to avoid that, then one way to avoid that would be to go to the identity protection PIN, which is another number which the IRS can use to identify you other than simply your social security number, a number that changes each year so that even if someone had your social security number, they can't basically file the tax return, and that can be one block against that particular problem with identity theft. So generally, by law, unemployment compensation must be included as income. Taxable benefits include any of the special unemployment compensation authorized under the Coronavirus Aid, Relief, and Economic Securities Act enacted in 2020. If a taxpayer didn't report income from gig work or unemployment compensation on a return or corrected return, a corrected return can be filed using Form 1040-X, amended U.S. individual income tax return. There's a link to that here. Form 1040-X can be filed electronically. Taxpayers who owe but can't pay in full always have options to seek help through payment plans and other tools from IRS.gov/payments. So tax information is also available in Spanish, Chinese, Korean, Russian, and Vietnamese. Resources also found here. IRS webinar, Understanding the Gig Economy. So you can go there if you want to look at more information on the gig economy and your taxes, things to know. Pay as you go so you won't owe. That's catchy. A guide to withholding and estimated taxes, ID theft regarding unemployment, tax treatment of unemployment. There's links to those outstanding resources and fun reading material here. There'll be a link to this in the description.